guys, it's AB Styles back again with another video. And in this video, I'm just going to be breaking down some trade opportunities that were present in on the charts this week. Let me first of all clear the charts, make sure it's clean. Using my strategy, of course, a very simple strategy, but it works, right? So this is Friday's candle. You can see we're on the daily chart. This Thursday, Wednesday, Tuesday, and this Monday. So we're going to be analyzing only for this past week. And as you can see, obviously it's a bearish trend. We are sinking absolutely to the downside, and I don't see anything. Perhaps it's reacting off this other block right here, this other block that you see right here. Perhaps price is respecting it, I don't know. But prior to that, it was the draw on liquidity, so we saw bearish movements. And in a trending market, my strategy works like magic. So I'm going to break it down easy. You can see, if you're new to this game, you might not be able to see it at first, but as you continue to practice, your eyes will get used to it. You can see clear higher high, lower low, higher low, lower low, higher low, lower high, lower low, lower high, a lower low, and then we are making our way back up. We might take out this structure and continue to the downside, or we might just break out, close above, return back to a discount, then change. There will be a change in trend, but that is the future, or we leave the future for the future. Let's talk about what has happened in the past. So just looking at this, you can see that price is respecting bearish arrays. You can see that this is another block on the hourly that price tapped into and sank to the downside. You can also see that there was an imbalance here, a fair value gap right here. That price tapped FVG and continued to the downside. So this is on the hourly. So if we are trading only the hourly charts, you can see that there's not a lot of opportunities to get in using my strategy. But let's drop down to the 15 minutes, which is the execution time frame, and let's see how it looks like, right? So the yellow boxes you see, these yellow boxes is the Asian range. The first dark box is the London kill zone, and the second dark box is the New York kill zone. The New York kill zone, right? So coming into this new week, this is Sunday and this is Monday, right? So the strategy is simple. So this is an opening gap. So price basically just returned back to fill this gap. Basically, in fact, let me call it. Let's just call it a sell-side imbalance. But it's not really. It's actually a new week opening gap, right? So, anyways, the strategy is simple. I wait for a fake move in the London key zone or the New York that sweeps out liquidity from the previous highs for those people that are trading, and then I wait for a market structure shift with displacement. The displacement is there should be presence of a fair value gap, as you can see right here. There should be the presence of a fair value gap, as we can see right here, and consecutive candles to the downside. So this is what we have here, and it's simple. We target a 1 to 2 is to reward, right? So now these two consecutive candles are one order block, right? We treat it as one order block. We don't just target this one. We can target it for the extreme. Sometimes price might get there, but most times price won't do it. Because why would the price take people out here, close this gap, break structure to the downside after this long range move, and then return back to let people get a second entry? No, they won't do that. So this is the first entry. This is the entry rather, and the target is just a 1 to 2 because we want to be in and out of the market quickly as soon as possible, right? So simple, a winner. Sorry about that. So it's a simple winner, right? Then that's all for Monday. Tuesday came and we saw an almost similar setup. Take note, this is a fair value gap on the hourly. We're not going to make use of it right now, but then we saw that people that were trading their stop loss is, you see, lower highs, lower low, lower highs, lower low. There's a ton of stop losses above these highs, and it's also the Asia highs. You see price in the London session rallied up, took out these highs, took out the liquidity on these highs, and then we have the same setup. You see, we broke structure to the downside, and one could easily, place an order around here as an order block. And when you get to this kind of moves, you ought to put your stop loss above the structure highs. If you get a wick above, that is the safest place to put your stop loss. You can't go putting your stop loss above this place when you have a structure high behind you there. No, so you're gonna get kicked out easily. But in this case, even with the structure highs, we still got kicked out, right? So it was very it's one of those scenarios whereby the edge feels and price goes in your direction. One of those painful things, but it's part of trading. So this would have been a losing day. Then heading over to the next day, take note on the hourly we formed the fair value gap, but let's assume we didn't care about the fair value gap. Let's take it out. Alright, we can see that price is creating lower lows and lower highs, lower low. Then in London again, there was a rally that took out what liquidity from these Asian highs once again. You see, and also there's a tap in the 1 hour fair value gap, but let's not consider that right now. But then we saw a structure forming what you can see a displacement, right? There's a fair value gap here showing displacement, FVG. Yeah, so immediately price returned to that fair value gap. That's our entry. Also, the consecutive candles you see here, these 3 consecutive candles, 4 consecutive candles, is one order block. So you can also use that for your entry. So the stop loss, 10 pip stop loss, targeting here, 2 arrow, the usual. And price hit it beautifully well. Obviously, you can target longer than that, but for easy take profits and psychology, 2 arrow is good. So on this day, price did the exact same thing. This is a high. This is buy side liquidity. This is Asian highs. Price rallied up in the London session and took out this liquidity. Originally, following the model, this is our entry here. This candle that took out the liquidity is our entry. It's an order block, and we wait for what price to return back to this order block to tap it and target a 2 arrow. But on this day, we don't have a return. Price was too, let me say, lazy perhaps to come back up, and so basically this would have been a no trading day for following the model, right? Then on this day, you can see that Thursday formed the Thursday reversal. If you know about the weekly profiles, Thursday usually forms the reversal for the week. So after a bearish week, we also tapped into that daily order block I showed you from way back here. So I don't know what's going to happen right now. We don't care about what's going to happen. All we do is watch and wait. This is the daily order block. Let me just mark it out. So we just tapped into the daily order block and we are seeing some sort of reversal, right? So I wonder what will happen. I don't know. If we have to go down, maybe to clear out these lows and continue up, we don't know. All we have to just do is wait for the model in the London key zone or in the New York key zone, sweep of liquidity, break the structure to the downside, return back to another block of fair value gap, and then we take our trade. In this example right here, we can see the similar setup here. You can see that on Friday, price rallied up, total liquidity from these highs, possibly these Asia highs. But you see the market structure shift is not with displacement. There's no displacement. So it doesn't follow the model. Look at the other trades that we are taking. You can see the displacement obviously. Even this one that's a loser is even a clearer setup, a cleaner setup than this. And also with the number of wins we have had so far this week, 2 wins, 1 loser, 1 missed trade. I think sitting Friday out will not be such a bad idea, but if you decided to take it, following the model blindly, you might have taken a loss. But this is not the model, right? And then you might say, okay, let's draw another block here. But look at the other block, then look at the breaker structure to the downside. It's too close. It's way too close. There's no market structure shift to the downside in this trade. So this would have been a very bad trade to take, and you might have fallen victim and taken a loss, depending on your psychology and your greed, contentment level, just whatever. Anyway, so following this trade, even taking 3 hours would have been beautiful. 3 arrow win here. Sorry about that. 3 arrow win here as well. So you can see the model clearly, and 3, 6, -1, 5 missed trade. So that'll be 5 arrow for the week, and trust me, that's a beautiful return on investment. If you are trading 5 arrow, risking 1% is 5%. 5% of your 5K account is $250. Of your 10K account is $500. Of your 100K account, 5% is $5,000. So basically that is it. That'll be all for this video. Thank you very much if you watch until the end. I know I've not been uploading consistently, but I've been going through life and everything. But I'll try to be more to upload. The few times I'm free, I'll try to upload so you can get a little bit of value from this channel. And please leave a like, subscribe, and see you in the next video. Have a nice day. Styles out.